By the time the European markets get underway on Tuesday, the 1st of November, we'll have rolled out Shell earnings for the third quarter after the disappointing set of second quarter results when it missed consensus by a whopping 52%. Management has already indicated that this year overall will be fairly messy, with comparisons difficult because of the acquisition of BG Group earlier on this year, and of course also the third quarter to third quarter comparisons over the year because of the drop that we've seen in the price of oil. Put all that together with a continuation of this oil price volatility, it always makes comparisons very difficult for investors to swallow. Let's look at some more detail now about the chart and where things are likely to move in the wake of these numbers, as I say, come out early tomorrow morning. But Shell, like BP, we've also got earnings out from BP as well. Shell very much at the behest of the oil price.
Certainly, yeah. I mean, look, ultimately, irrespective of what happens elsewhere in terms of the company itself, it's also always going to be sort of dragged one way or another by what happens in terms of oil prices. Oil prices are very volatile recently, with a lot of headlines coming out one way or another. And as such, you're likely to see that in terms of the share price. In terms of the share price, you can see 2016 certainly being a very strong year for the company. And as such, you know, there's nothing to say that this is going to be over quite yet. Now, the one worry is the fact that we have rallied into this 21-24 mark. That is the previous peak that you see here back in July 2016, and we've started to weaken from there. So the question mark is, are we starting to retrace this rally that we've seen recently? If so, then the question mark comes, well, we couldn't break up above 21-24. Are we seeing a double top formation? I don't necessarily think that is the case. You know, are we seeing that retracement, or are we just seeing a short-term period of consolidation before we see a rally higher? Well, actually, if we look on the 4-hour chart, we can see that price action largely has been sort of forming this descending channel pattern. It's not necessarily showing, if we see it on the daily time frame, you can see it a little bit more clearly. It's not necessarily showing any signs that this is going to be a sort of long-term move. I guess the earnings figure is going to largely break it one way or another. But what you've got to watch out for is, generally, this is a continuation pattern. You've seen a strong move coming into it. You're seeing a very shallow retracement. If this wanted to retrace this whole move and wanted to create a double top, you would think that it would start to sell off in a lot more vigorous manner. It's not necessarily happening. It makes me think that we're going to see the break towards the upside from this. That being said, of course, it is down to what happens with the earnings. And if we do get, say, an hourly close up above your first swing high on this occasion, let's say it's that £21 mark, around about that. If we get an hourly close up above there, then I would expect it to push on pretty quickly, break back up above 21.24 and onwards and upwards. We take it back to the weekly time frame, look at some potential targets, where the next major swing high above there is going to be 24.75. So we have got a nice area where we could rally into and then really set ourselves up for another strong move. But a lot of it is down to what the oil price is doing. A lot of it is down to what the earnings is doing. And as such, we'll wait for that breakout from that channel and take our lead from there.